Hello. Welcome to Shaun Academy. Today in this video we're going to learn which business structure you should choose for your company. S Corp or LLC. My name is Sarah and I will be your instructor in this video. Choosing the right business structure is critical to your company's success. A limited liability company, LLC, is a type of legal entity that can be used when forming a business to protect the owners from personal liability for debts and other obligations that the business may incur. In other words, the owner's personal assets cannot be used to pursue legal claims against the business. LLCs are popular because they provide the same liability as corporations but are easier to set up and have fewer regulatory requirements than other types of corporations. Personal liability protection is provided by LLCs, which means creditors cannot seize the owner's personal assets. An LLC also permits pass-through taxation, which means that business profits and losses are reported and taxed on the owner's personal tax return. LLCs are advantageous to sole proprietorships and partnerships. An LLC with multiple owners is taxed as a partnership, which means that each owner must report profits and losses on their personal tax return. The structure of a S corporation also protects the personal assets of business owners from corporate liability and passes through income, usually in the form of dividends, to avoid double corporate and personal taxation. Because they have more oversight, S corporations aid in the establishment of a company's credibility as a corporation. S corporations must have a board of directors that oversees the company's management. S corporations, on the other hand, can have 100 shareholders and pay them dividends or cash payments from the company's profits. An S corporation provides limited liability protection while also allowing corporations with 100 or fewer shareholders to be taxed as a partnership. S corporations are also referred to as S subchapters. In some cases, a company can be both an LLC and a S corporation. You can form an LLC and elect to be taxed as a S corporation, but your company can also operate under the LLC's default taxation system. In order to qualify as a S corporation, a company must follow specific guidelines established by the Internal Revenue Service, IRS. The business structure you select can have a significant impact on some critical issues in your business life. These concerns include your exposure to liability as well as the rate and manner in which you and your business are taxed. It can also have an impact on your financing and ability to grow the business, the number of shareholders the business has, and the general way the business is run. The Small Business Job Protection Act of 1996, which included a number of changes to basic corporate tax law, such as allowing S corporations to hold any percentage of stock in C corporations, propelled both LLCs and S corporations to the forefront. C corporations, on the other hand, are not permitted to own stock in S corporations. Due to the basic benefits of liability protection, limited liability companies, LLCs, are popular and are typically used by a sole proprietor, single owner, or a company with two or more owners, partnership. LLCs shield the owner's personal assets from company losses, debts, and court rulings. Because LLCs are taxed differently than traditional corporations, or C corporations, they may also provide some tax benefits. An LLC can be used to form a small business, such as a doctor's or dentist's office, or it can be used to form a legal entity that owns commercial property. In addition, an LLC can be formed by family members who conduct business in states where LLCs are permitted. Entrepreneurs should consider the various characteristics associated with forming an LLC before forming one, which include the following. An LLC may have an unlimited number of owners, referred to colloquially as a members. These owners may be U.S. citizens, non-U.S. citizens, or non-residents of the United States. Furthermore, LLCs may be owned by any other type of corporate entity, and an LLC is subject to significantly less regulation when it comes to the formation of subsidiaries. The operations of LLCs are much simpler than those of other corporate structures, and the requirements are minimal. While it is recommended that LLCs follow the same guidelines as S corporations, it is not legally required. Adoption of bylaws and holding annual meetings are two examples of these guidelines. Instead of the detailed requirements for corporate bylaws that S corporations require, LLCs simply adopt an LLC operating agreement, the terms of which can be extremely flexible, allowing the owners to set up the business to operate in whatever manner they prefer. S corporations are required to keep and maintain records of company meetings and decisions, whereas LLCs are not. An LLC's owners or members can choose whether the business is run by the owners or designated managers. If the LLC chooses to have the owners manage the company, the business will operate similarly to a partnership. Limited liability corporations are taxed differently than other types of corporations. An LLC permits pass-through taxation, which occurs when business income and losses pass through the business and are instead reported on the owner's personal tax return. Profits are thus taxed at the owner's personal tax rate. A single-member LLC is usually taxed as if it were a sole proprietorship. Profits, losses, and business expense deductions that reduce taxable income are all reported on the owner's personal tax return. An LLC with multiple owners is taxed as a partnership, which means that each owner must report profits and losses on their personal tax return. Because LLCs pass all company income through to the individual owner's tax returns, they avoid the double taxation that C corporations must pay. A C corporation, or C Corp, is a corporate legal structure in which the owners, or shareholders, are taxed separately from the entity. C corporations, which are the most common type of corporation, are also subject to corporate income taxation. Profits from a business are taxed at both the corporate and personal levels, resulting in a situation of double taxation. If you found this video useful, please show your appreciation by clicking the like button. Also, let us know in the comments if you'd like us to make a long, comprehensive follow-up video to learn more about S Corp and LLC and which is best for your business. Also, don't forget to click the subscribe button to see more videos from Shaun Academy, an extension for education.